Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Markets are firmly in trend mode with strong moves across asset classes continuing into this week. The dollar index is on track for its seventh consecutive weekly gain, exerting pressure on other major currencies. The euro has struggled significantly against the dollar as regional weakness in Europe becomes more evident. In Asia, it is a similar story. The Chinese yuan leads the depreciation among the Asian currencies, down 1.5% this month against the dollar, with the Korean won following closely, which is down 2%, a continuation of last month's downward trend. One standout is Bitcoin, with a record breaking rally that has pushed the digital asset past $89,000, lifting the total crypto market value above its pandemic era peak as traders bet on growth under President elect Donald Trump. Meanwhile, gold has taken a hit, down 4.5% this month. Good morning, JK. With such trending moves, dollar strength is impacting global markets. How are you interpreting these shifts?
Yeah, good morning, Swaraj. See, the usual lull on a US market holiday, which was on a Veterans Day holiday yesterday, was conspicuous by its absence. In fact, we saw many significant moves yesterday, where, of course, the stock market was open and that also further moved into the positive territories. Now, if you wondered what moved most after Trump victory, Bitcoin wins the race hands down with nearly 30% rally. From 69,000, we are up to 89,000 now. While it was known that Mr. Trump is a supporter of cryptos and particularly Bitcoin as well, the staggering move within 5 days would have surprised even the hardcore BTC bulls. Now, apart from the speculative positioning, something more significant is an idea floated by Mr. Trump that BTC, rather the Bitcoin, could be used to repay US national debt. Now, while the feasibility of this cannot be assessed right now, market has jumped into the bandwagon and taken it to a level from here, perhaps a retracement is definitely possible. Now, the strong dollar was at last seen weighing on the gold prices for the first time in months because it's also associated with increasing odds that Federal Reserve might delay its easing cycle. Some are even talking about a pause in December. Now, gold had ignored not only the dollar strength, but even the big rise in yields, almost 80 basis points in 2 and 10 year in the last 1 month. And it seems as if the gold gains for the year hit nearly 40% at 2,790. At least some investors seem to be shifting to the attractive treasury yields. And that has resulted in more than 6% correction from the peak. And nearly 3% of it happened in yesterday's trading alone as the stop losses kicked in. Now, will this keep sliding further? Not likely beyond too much because medium-term positioning of central banks, repositioning of central banks away from dollar will come into play at some point, and gold is one in which it has the maximum. Gold hasn't got the maximum benefit out of such a repositioning of the central banks. Now, sooner or later, we should see the central banks latch on to attractive levels of gold, certainly well above the 2,500 mark. Meanwhile, the dollar index, as you mentioned, has also risen, further in yesterday's trading. And a notable feature is, of course, movement is confined mainly to two currencies, that is euro and the Chinese yuan. Euro, obviously, the weakest of the major currencies. As you can see, some of the currencies are really within a very small range, like the Canadian dollar or the Australian dollar, or even the GBP. Which had hit a much lower level even before Trump victory, is holding on near 2850 level. So it's a euro's weakness, and that actually with a weightage of more than 50% on the dollar index is weighing on other currencies as well to some extent. EM currencies, of course, are taking a bigger hit. We saw the Mexican peso, the South African rand, and the Brazilian lira, all Brazilian real, all taking a hit yesterday. And if you compare these moves with what's happening in the rupee, it's very, very insignificant because rupee has carved its own path for quite some time now. moving in its own snail space, guided by the central bank. And it has actually been on the weaker side, even when the dollar was on the weaker side. It's completely related to the outflows and the central bank's supply of dollars to see that it doesn't create any big major wobbles in the market. And with the speculative element almost non-existent in the market, the movement is definitely been very, very measured, and doesn't mean that the rupee will not weaken much further. But as dollar index reaches the year high near 106.20, very likely that central bank may hold the dollar rupee below 84.50, and that could be a level where some export interest might also resume for selling. So all in all, big moves yesterday, and of course US resumed today, and we are now heading into strong, a busy data week. CPI from India today and CPI from US tomorrow, then the retail sales, a lot of things. But I think these data are going to receive much less attention. Market actually waits for some real policy statements from the Trump or from his administration. Perhaps such an eventuality where they speak out, market may tend to take some profit on the big moves that we have seen so far. So it may be possibly buy rumor, sell fact, because market has already moved significantly. So we wait when for these data points as well as from official speak. Till then, market is not going to reverse. Thank you.
Thank you, JK. And just quickly summarizing, gold prices took a hit as US exceptionalism might lead to Fed delaying some rate cuts, and the impact of higher yields are finally taking some limelight away from the gold into these attractive treasuries. But as gold prices drop, it may attract more central bank buying, which may keep the yellow metal supported. Euro and Chinese yuan weakened significantly. Emerging market currencies are taking a big hit, whether it's Mexico, South Africa, or the Brazilian currencies. These are trading significantly weaker against the dollar. Compared to all of that, in that context, rupees moves very, very limited. It's weakening very slowly, and 84.50 might actually turn out to be a significant level, which may attract some selling by exporters. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.